Welcome, everybody. Good afternoon, good evening, good morning, wherever you're at. This is another Directed IRA webinar. My name is Nate Hare. I am the Vice President of Sales and Strategic Relationships with Directed IRA, and we've got a very special guest, somebody I've known for decades now. I know that dates myself, but I can't wait to bring him on because one of the things that we talk about as a self-directed IRA custodian is how advantageous and important it is to be able to invest in the things that you're knowledgeable about instead of just being locked into investing your retirement account into the stock market. We all know that people are getting crushed in the market right now. So people are looking for alternatives. And a lot of people always gravitate towards real estate. Now, why do people gravitate towards real estate when it comes to a retirement plan? Most people understand what a 3-bedroom, 2-bath house looks like or what a rental property looks like. But most people, they're busy. They're busy working their 9-to-5 jobs. They don't know how to find their own deals. And then once they find them, how do you negotiate these deals? How do you find good investments when it comes to real estate, which is an alternative investment? And how do you find them and negotiate them so that it benefits your retirement plan? So we're going to talk a little bit about that. But first, I want to have some quick announcements and talk about who Directed IRA is, because we have a lot of viewers that are on for the first time. Maybe they saw one of Matt Sorensen's or Mark Kohler's YouTube channels, and you're just interested to learn more about self-direction. So we're going to tap into that first. I do want to mention, if you want to bring up the first slide there, Angel, we do education, which is a big part, not only these webinars, but we do live education as well. If you're interested in learning more about how self-directed IRAs work, some of the strategies that some of our clients use, and not only that, if you're looking for access to more private capital, there's $45 trillion in retirement plans. It's the largest source of private capitals for investors looking to buy more real estate of their own. So understanding how to tap into that and understanding how self-direction works, you want to start attending some of our own live events. And we have 2 events. One of them is going to be our Self-Directed IRA Summit. We do it once a year, and it's going to be in Austin, Texas, and it is this month. You've got 2 weeks, about 2 weeks, to get your tickets. Now, I would highly recommend you get live tickets, either a general admission ticket or a VIP ticket. Okay, if you can make it out to Austin, we probably got 50 or 60 seats left. That's capacity. Okay, once we hit capacity, we can't let anybody else in. So if you want to come live, I highly encourage you to come live. Go to sdirasummit.com. You can use my personal promo code NATE50 for a $50 discount on any ticket. And if you can't attend live, get the virtual ticket. Okay, you still get $50 off. You also get copies of the recording. The virtual ticket's great. You don't get quite the networking opportunity you do being there live. So I would try to go live if you can, but if you cannot make it live, at least get the virtual tickets. So go to sdirasummit.com. You'll find more information about what we cover. There's a lot of great speakers. A lot of it's going to be from Matt Sorensen, our CEO. He wrote the best-selling book on self-directed IRAs, the Self-Directed IRA Handbook, version 1, version 2. We're going to have Mark J. Kohler, nationally renowned tax attorney, our other principal here at Directed IRA. There's a lot of education that's going to happen at that event, not only about self-directed IRAs, but just general asset protection and wealth building. So make sure that we see you guys April 26th. We do have a welcome reception on the 25th if you're interested in doing a little extra networking, but we do an all-day session on Saturday, the 26th at the Austin South Park in Austin, Texas. So next slide there, Angel. We're going to talk a little bit about self-directed IRAs, but also we're going to bring in a special guest about how he has found success finding deals and negotiating deals and teaching other investors on how they can do this as well. But I want to cover a couple things first. We are not giving tax, legal, investment advice here. All of the education, all of the information that we provide here from Directed IRA is for education purposes only, even when we have guests on, and we're not selling you any types of investments. We're just teaching people about what is a self-directed IRA, how do they work, what are the types of accounts that can be self-directed, and how's the process work? How do you start investing your retirement plans into alternative assets instead of just simply publicly traded assets? Now, if you haven't heard that this is even possible, I hate to burst your bubble, it's been possible since the mid-70s. When IRAs were created in the mid 70s, they've always been able to own the same types of investments. And I say IRAs loosely, we're talking about IRAs, 401ks, 403bs, 457 plans, any type of retirement plan. You really have about the same options when it comes to the assets that you can own inside of those plans. The biggest difference as far as what you're allowed to invest in doesn't come from Mr. IRS. It comes from the custodian that manages or custodies your account. So when you have an IRA with, say, a Fidelity or a Charles Schwab, okay, they're only going to allow you to hold in an IRA with them what we call traditional investments. That would be stocks, bonds, mutual funds, CDs, things that are publicly traded, things that are normally tied to Wall Street. Okay. That's not the only thing you're allowed to own inside of a retirement plan. You can own pretty much anything under the sun owned by your retirement plan, except two assets: life insurance contracts and collectibles. Those are the only two investments the IRS says you cannot own these in a retirement plan. So as a general rule of thumb, if you can draw up a purchase contract to buy it, your IRA can be the buyer. You just have to find a custodian that will sign off on the investment and hold the investment in your retirement plan until you take distributions. That's when it becomes your benefit as the account owner. But until that time, you just have to have a custodian buy the investment, sell the investment. And when you buy and sell it through the IRA, remember, your IRA is a tax-exempt entity. There's no tax reporting. There's no tax on the gains. There may be taxes when you take money out. That's a different conversation. We'll save it for the next slide. But when it comes to your IRA investments, you can invest in almost anything. You just have to find a company that'll hold the investment. So what do we hold at Directed IRA for most of our clients? We call them alternative investments. Real estate's probably the biggest one, but we're not talking about ownership of real estate directly all the time, which we'll talk a little bit more today, but we're talking about any investment property, a rental property, a small duplex, triplex, commercial property, land, multifamily, right? Notes secured by real estate. That's a good way to invest in real estate passively. But we also hold non-real estate investments, which would be, some of your oil and gas investments, or even cryptocurrency, direct ownership of cryptocurrency, private stock. I mean, it really goes out to the extremes when you talk about the different types of investments you're allowed to hold. And here's the other thing, guys, you're not limited to how many IRAs you're allowed to have. So most of my clients do have an IRA at Fidelity that keeps their traditional investments, but they also have an IRA here at Directed IRA that holds what we call our alternative assets. Now, when we talk about the types of accounts that we offer here that can be what we say self-directed is just a marketing term, okay? It doesn't really mean anything. When we say self-directed IRA, all we're really saying to you as the client or the account owner is that you have to tell us what the investment is. We don't have a list of investments to sell you. We don't have homes to sell you. We don't have notes to sell you. When you have an IRA with us, whether it's a traditional IRA, a Roth IRA, a SEP IRA, a solo 401k. We even have self-directed health savings accounts and education savings accounts. These are all the same types of accounts you would have other places, but we're not a licensed securities broker like Fidelity. We don't have a list of mutual funds to sell you. You have to tell us what the investment is. And this is where we're getting into the topic of, well, how do you find the investment? If I need to tell you what the investment is, how do I, as the account owner, find the investment? Well, oftentimes our product is geared to people that are maybe full-time real estate investors. They have access to deals. They're out door knocking. They're finding investments. They're just choosing that some of those real estate investments are going to be owned by their tax-exempt retirement account and not everything owned by them personally. Or they may have a relationship through maybe an investment sponsor or a syndication or something like that. But what really keeps people on the fence, I think, about self-directing is two things. They don't have quite the education to understand how it works, but the biggest thing is they don't have the access to the deals. They don't have time to find their own deals. They don't know how to go out there and find them. And that's why I'm excited to bring on our guest here in a second. But what I want to do now is I got some other slides here. If anybody wants more education, I could send them my slide deck. You could take it down here, Angel. But I've got pros and cons to all the different account types, about what types of accounts we offer, how the tax benefits work. But again, what keeps people on the fence about self-directing is they just don't know how to find the deals. They don't know what types of deals to look for. They don't know how to negotiate terms when they find those deals. And we've got the expert, I would say the expert, the godfather of real estate, I call him, Mr. Ron LeGrand. If we want to bring Ron on. Ron, can you hear me?
I can hear you.
Well, Ron, we've known each other for, I don't know how long, maybe 13 years now, would you say?
Oh, I don't know. I met you when you worked for Quest. I don't know how long it's been. Man.
Yeah, well, I've been in the industry 13 years, and I think that I was coming out and speaking at your events pretty much all 13 of those years. And, one of the things that I'll just say, my personal opinion about Ron is there's a lot of people that educate investors, and especially when it comes to real estate. I've spoken at a lot of events. But Ron's events are a step above, I think, almost everybody's, because you really focus on giving all of your students the tools in your tool belt. And one of the tools that you've talked about from the very beginning is using a self-directed IRA. Where did that come about? And when did you start self-directing?
I started self-directing probably in the early 90s, I think. I'm not sure. My IRA is with you guys now. But I can't tell you a date. I mean,
Yeah.
You've been educated a long time ago.
Yeah, I mean, it's a long time ago. I mean, a lot longer than I think most people have even known about self-direction, because I would say, at least in my experience, we've seen a big pendulum shift to investments now because just what the market's doing. So people are just realizing, and I think the access to information is people know that they can go out and find their alternative investments, where back in the day it was a little bit tougher. So
I heard you mention the trillions of dollars worth of money sitting in these accounts. That's so true. I've done 5 private placements, and that's where at least half that money came from, is people's IRAs.
Right.
So, all right. So, we going to use my slides or your slides?
Yeah. If you want to share, you've got your slides. So if you want to share your screen there, you can start sharing your slides, and I'm gonna let you take it away. Yep. And I'm just gonna jump in and add some fluff there if we need it, but you're the expert here. I want you to kind of take it away and talk a little bit about how you use self-direction and the things that you've understood.
Yeah. Jump in anytime you want. And if I disagree with you, I'm right, you're wrong. I'm the older person here.
Okay. All right.
No, I come to you for advice on this stuff. All right. Which this one you should be doing. What's the difference between a Roth and a traditional? Don't you think?
Well, yeah. I mean, we talk a lot about that. We talk about, there's different types of account types that you can use when you self-direct. One of the things when you self-direct is you can almost play call what you think you might make on a deal, especially if you understand the deal itself. So we talk a lot about, well, do you want to do those types of investments in a traditional or tax deferred account, or would you rather do it in a Roth? I know me and you are big proponents of the Roth because of the fact that it grows tax free. And if you really want to get Uncle Sam off of your back for life, you want to invest through a Roth IRA that's not taxed on any of the gains when you start taking the money out.
And while we're on that subject, you can move traditional money to a Roth anytime you want. If you understand, of course, that you're going to pay taxes on that transfer that year. And if you're going to do anything with the IRA, when you get it set up and combine it with real estate, then that's a very important job for you to do. But if you're going to move over to Roth and just let it sit there, you might as well leave it in a traditional, because you're not going to gain anything.
Yeah. And I'll just add one thing and I'll let you take it away. When you think about real estate, one of the things that I think about real estate is that it's an asset that cash flows, and it's an asset that appreciates. There's also other streams of income with it too. But if you have an asset that has multiple streams of income, why would you pay taxes on all those streams of income? So I think a lot of the investments, especially when you get down to talking about the investments on terms, where you structure on terms, Ron, we'll get to that in a second. I almost think it's a no-brainer to use a Roth IRA in those investments versus a traditional IRA.
can't even imagine why anybody would want a traditional, to be honest with
Yeah.
you. However, while we're on that subject, if you got a 401k or whatever pension plan and you leave the company, then they can't stop you from moving it, but they'll only move it to a traditional. In that case, go open up a Roth and transfer any amount you want. In fact, I just did that last year, did the exact same thing. And just if I'm in a low income year, that's a good time to transfer it.
Yeah, and what Ron's talking about there is called Roth conversion. So we do a lot of education on that, but most people have a traditional IRA because they come from those old employer plans. But anybody nowadays can convert to Roth because there's no income limit on conversions anymore.
Correct. I did some calculating myself, Nate, way back. And I took a 10-year term, and I think I used, I don't know what number I used. The point is, if you use a Roth IRA that generates revenue and you leave that revenue in there and then you keep investing and compounding, at the end of that 10-year period, you have 10 times more money in your Roth than you will if you did the same thing outside of your Roth and paid taxes as you go. That's the kind of thing people don't sit down and actually figure out. Well, I guess most people can't figure out how to figure it out and be my guess, but it's a real fact. Nothing better to grow your wealth than not having to give the IRS any piece of it, and that includes when you take it out as well. All right, tell them what they need to do to set up a Roth. Very simple.
Well, if anybody sets up an IRA that wants to be self-directed, go to directedira.com. That you mentioned Ron LeGrand. There are other companies out there that do what we do, but I would say that we've, kind of put ourselves in a position to really help the real estate investors, the people that are actually investors. I've got Aaron Halderman here, by the way.
Hey, Ron.
Yep.
Hey.
And we started as investors. This is why I think, if you're an investor, especially when it comes to real estate and you're looking for, not advice, but guidance as long as how do you use these self-directed IRAs to invest in real estate? I mean, we do it. Matt Sorensen does it himself. Mark Kohler does it. I mean, we practice what we preach. So if you want a custodian that understands it and does it, reach out to us, directedira.com. It's easy to set up an account, 5 minutes online, give us a copy of your ID, and then work with I would say book a call with our team. It's always good to talk to one of our IRA account executives so they can walk you through the process, tell you how to move money, tell you how to deploy it.
That's correct. You're the man. When it comes to IRA, I think of him every single time.
I appreciate that.
You might as well tell him what you charge because you're the cheapest guy in the industry on fees.
Well, we do try to keep, we don't try to be the cheapest. I will say we're not the Walmart of the industry. I like to think that we're the Macy's. We give a good value. There are custodians out there.
We're the Nordstrom.
We're the Nordstrom. Yeah, whatever you want to say. There is a fee when you self-direct. Now, remember, the reason why we have a fee is because we don't make commissions. We don't sell investments. So we don't charge you in that sense. But we do have an account fee for each account that you set up, normally $3.95 or $4.95, depending on where you go. We have a transaction fee of $50 when you invest, your IRA, or maybe $150 if it's, for real estate related purposes. I think in a general sense, it's about a couple $100 a year. Okay. That's how we keep the lights on. There's other companies that might charge you thousands of dollars a year. You might get the same service. Okay. But there's always going to be a fee. I think that the fee is just something that you want to calculate in. You want to work with a company that can deploy your funds in an appropriate amount of time. They pick up the phone and they answer emails is what you want to work
with. Fee is totally irrelevant, guys and gals. If you're worried about the fee, you're worried about the wrong thing. Okay.
Yeah.
You need to focus on how you're going to take this IRA, marry it to real estate, and let it grow so fast your accountant thinks you're actually doing something illegal. And incidentally, that's not where you want to go get advice on how to grow your IRA.
Right,
your accountant or your attorney. If they knew, they probably wouldn't be doing what they're doing.
Right. Exactly.
All right. What's the I'm working on the job. I got earned income. What's the number by which I can't go over to get a Roth nowadays?
I think it's a healthy 6-figure income. So, and again, we're talking about making contributions to a Roth IRA. So, but there's always that workaround now. If you haven't started a Roth IRA, first of all, it's a good thing to start. You do have a couple days left in this tax period where if you haven't done your taxes yet, or if you want to amend them, right, you can make a contribution to a Roth IRA and actually have your 5-year clock for a Roth IRA start January 1st of 2024. Now, there's 2 things with a Roth IRA that make the income on the Roth IRA completely tax-free for life. having a Roth for 5 years, and being above the age of 59 and a half. There's still income limits for making contributions to a Roth. So if you're above the income limit, you can't put it directly in a Roth. But one of the things that we talk about a lot is called the backdoor Roth IRA. This has been available to people above the income limit since 2010. There's never been an income limit to make contributions to a traditional. So you can still make a contribution to a traditional regardless of your income. And they took the income limit on Roth conversions. I'm taking it from my traditional to convert it to my Roth. They took the income limit off in 2010. So if you're above the income limit to make a direct contribution to a Roth, all you do is just to do the two-step. You make a contribution to a traditional, and then you convert it to a Roth right after that. So really the income limit's almost irrelevant at this point, Ron.
Yeah, it is irrelevant, but some people would be surprised if they tried to do it and didn't know that.
Right.
And then they'd quit. They wouldn't keep going to figure out how they can do it. We're always going to figure out how to do this stuff legally.
Right. Right. And I'll say this, when you get to talking about deals, one of the things that you talk about a lot, which I love, is you talk about, it's not about how much money you put in the account, it's about how you invest it. And one of the things that you teach your students is how to structure deals on terms. When you're structuring deals on terms, when it comes to real estate, whether you're taking over somebody's payments, through subject to, or you're doing a lease option or something like that, you don't need a whole lot of money to start. So you can literally start an IRA and put $1,000 in there and get that started through some of your strategies.
Exactly what I tell folks to do. Open an IRA, put $1,000 in it. And in my case, I don't care if you ever make another contribution the rest of your life. Now, in his case, he wants you to keep making them. Okay. You put $1,000 in your IRA, you're going to quickly learn how to take maybe $100 for an earnest money deposit on each property, and all the profit from that property is going to go back into your IRA tax-free. And it is bloody simple how it works, but it's kind of like the land trust. I got to answer 150 questions on it and get anybody to understand it. And then when they do, it's so bloody simple, they kind of ashamed themselves. And when you got Nate right there, when you need him, you're not going to be allowed to break the law, do anything stupid. And you'll learn very, very quickly what you can and what you can't do. Go just on his website. In fact, I have a whole course on it as well, where I don't know how long it was, but I got a deal you can't refuse at the end of this.
Okay, well, we'll get to that. Yeah,
Ron, you make a good point about the EMD, the earnest money deposit. Don't wait to open an account and get it funded. Get enough money in there to do an EMD. And get in the game. Don't sit on the sidelines, because a lot of people then don't even get in the game. And they're like, oh, I wish I would have opened an account and had enough money to at least have an earnest money deposit ready. And they don't even do that.
Yeah.
So at least get ready.
When you think you need a lot of money to open up an IRA, forget it. In fact, the smartest thing for you can do is to operate without money inside and outside your IRA, like I teach. And then to make your IRA worth millions of dollars based on your knowledge of how to put a little bit of money and get back a big money. I'll give you some examples. Last year, there was a 2-month period when we wholesaled 5 houses. We wholesaled 5 houses, never bought them, never touched them, but put up a $10 earnest money deposit on each. And we didn't touch the houses. We didn't rehab them. I wholesaled them. And we netted $147,000 just wholesaling those houses over just a 2-month period from beginning to end. So $147,000 that would go tax-free forever in the side of a Roth. So did I do it in a Roth? No, I forgot to.
Well, and let's back it up just a sec, just for some of the viewers who are a little bit new to this. So most of you are probably familiar with having an IRA at Fidelity, right? You push a button, you pick what stock you buy, but what's happening in the background at Fidelity? They're exchanging your IRA's asset of cash for an asset of a stock. And then they're going to hold a stock certificate as evidence of what your IRA owns. Mm-hmm. At Directed IRA, we do the exact same thing. Just replace the word stock certificate and put in purchase contract, or stock certificate and put in deed, depending on how we're processing the investment. You first got to have an account with us. And I know what you're getting to already, Ron. I'm just kind of simplifying it to everybody. But once you get an account open and you've got money in there, you're going to work with us, the IRA custodian, to actually buy or deploy the funds on your behalf or on your IRA's behalf. You fill out a form with us. You say, we need to send an earnest money deposit to the title company, right? We're going to put the buyer's name on the contract as your IRA. So you're still having everything vested in the name of your account. You're just working through us to buy and sell real estate or assign a contract, right? Just like Fidelity, buys and sells your stocks for you.
I think we covered that pretty well.
Yeah.
It's not about contributions. You got to keep repeating that and repeating it to make it sink in, because sometimes it just don't sink in. I know I teach people, watch them, and looking right at me, and I can tell they didn't understand the word I just said. So it's not about your contribution. And this is what creates any arguments out there about what you can do with your IRA. Again, I made a $10 deposit on each of those 5 houses, $10 deposit out of each of them. So I put up $50, got back $147,000. See if your accountant approves that transaction.
Yeah. And these are the investments that would be deployed out of the IRA, right? It can put an earnest money deposit down. It can put an option fee down, right? And then once you've got that property tied up, or once you've got it tied up in a contract, then there's a lot of different exit strategies on how to do that. So, and that's kind of what you teach, is the different exit strategies, whether it's assignments, wholesale, whatever it is that you find, but it's not about contribution. It's about what you do with a small amount of money.
And before you go doing anything, you really should get trained on real estate, which I would be glad to have you in my class, because I don't know where else you're going to learn it any better. Because if you don't know how to use real estate, the fact that you can use it in your IRA won't do you a bit of good. Your CPA don't know how to do that. Your attorney don't know, because they don't know how to do real estate. So you got to make sure that you get a good comprehension around how you can do deals with. And your only big decision is whether I want to do it in my IRA or whether I don't. That's the reality of it. If you're doing your IRA, you're doing almost exactly the same thing if you're doing it out of your IRA, and you'll learn the rules as you go. And I think I got him in here somewhere, because we got to tell them the rules before we get much further.
Yeah. Why don't you jump into that? You have some slides that you want to pull up again?
Yeah. All right. My favorite thing to do with the IRA is just wholesale houses. Put up a deposit, flip it, almost instant money. And in this market we have today, you can't wholesale a house in a few days. You're charging too much for it, because we have a ravenous herd of unskilled investors out there making offers on all these junkers all over the country. In fact, I've never seen so many of them out there. And I've been around for 43 years now doing this. So, but the good news is there's still plenty left for you. You just got to learn how to get to them. And we got that conquered. And then you got to learn what to offer on them. I got that conquered. You just get the training first. In fact, if we send you something at the end, which we're going to do, then you can make a decision on how you're going to get your training and how far you want to go up, because we start from a book and go up as far as you want. But here's the first one. Buy a house with nothing down on terms. $100 deposit, because these IRA guys like to see you put up $100, not $10 like we do outside the IRA. Right, Nate?
It makes more sense. Yeah. And there's got to be some sort of investment deployed. So $100 sounds nice.
Yeah. Okay. So then you put a tenant buyer in the house. Now, look, I just did one of these. Bought a house, just did 2 of them. Bought a house with nothing down. So run these numbers. Bought it for $440,000. It's worth 5.25. I had it appraised to verify it. And I bought it with no money down, a 5-year balloon, and 3 months before I make my first payment, and the house is in excellent condition. All right. That would be a fantastic deal to put in your IRA, with one little tiny problem. And that is, when you sell that house, because there's debt on it, you're going to trigger UBIT, unrelated business income tax. But then, IRS don't take it all. So there's still plenty left over. I got another house that I've owned 10 years. Nate, you ought to hear this one. So I owned it 10 years. I took over a loan of $351,000. It was worth about $385 then. Realtor didn't get it sold. Payments were $1,925 a month. I got a tenant buyer to put up a $50,000 non-refundable deposit, move into that house. They had the right to buy it. But 2 years later, they moved out. So let's say that were done in my IRA. All right, my IRA would have gotten that first $50,000. Then it would have got the $575 a month every month that it was rented out to a tenant buyer. And then the IRA, the appreciation is a big deal inside or outside of your IRA. And over those 10 years, that property has literally doubled in value, doubled in value. Of course, you don't need depreciation because you're not paying taxes anyway. But you got all these income streams coming from one property going into your IRA because you made one decision, one time to get this thing going. Again, you got the UBIT issue on this deal, but I think it was Nate that taught me this. If you want to put this in your IRA, don't buy it. Just lease it with an option to buy. And that's not a debt. The IRS is not going to want you to pay taxes on the gain, right, Nate?
Or do it in a solo K, I think is what we were talking about too. So there's ways around that tax. And before we get down that, because we did cover a lot of that on our last webinar, but what I want you to kind of define, Ron, is what does it mean to buy on terms? Because a lot of people that come to us, I would say, they automatically think if I'm going to buy a house in my IRA, I got to have $400,000 in there, right? Yeah. You're not saying that. You wouldn't even tell anyone to do that. That would be crazy. You're saying put a small amount, maybe buy more houses, put a deposit down, do an option fee, and maybe carry back some terms. Define the different ways that you can buy on terms for people that are unfamiliar with that.
All right. I'm sitting here right now. I'm thinking to myself, you guys watching right now, you probably don't have any idea that this one lesson you're getting right now could change the future of your life forever, and your kids' life and your grandkids' life, because you learn how to turn real estate into money. Real estate is not where you put money. Real estate is where you get money to put in other things. My favorite thing to do with money is to actually pay cash for a house, pay cash for a junker. One of them, we had it under contract for $48,000, I think. We sold it to a real investor for $112,000 in 9 days, and that netted $52,000. So think about that. Is that a good use of your IRA? Oh, how much better use could you find? Put it in a house, flip the house. IRA grows really, really fast. And then, there's other terms deals like this. Again, I can do them in an IRA, and I should have done this one in my IRA, but I should have, would have. I'm telling you right now, going forward, I'm going to do. My IRA is going to go get first to pick on all of these things, as I don't have to have the money to live on, and you won't either if you're in real estate very long. But what I didn't tell you was that over this 10-year period, that property has generated $648,000 in me from the multiple sources, and I still own the property. That's what we call golden geese. We get them in your IRA, and I'm telling you, that's sitting out there churning and burning for you. And the longer you own a house, the more money you will make. No exceptions.
And let's mention something for people that are unfamiliar with what we call prohibited transactions. When Ron says put this in your IRA, what he's talking about is you need to buy the property in the IRA first.
Day one.
Right. Day one. It has to be when you use your IRA, it has to be an investment that you buy from what we call a non-disqualified person. Okay. You can't buy your own property. You can't use your IRA to buy your own property. So if these are properties you already own, you're not dumping them in your IRA after you've bought them personally. You're locating the property that you want owned in your retirement account. You're having the buyer be the IRA. You're having us sign the contract and us deploying the earnest money. We're buying the property, right, from a non-disqualified person. That's how we get it in the IRA. But there's no contributing your own property into the IRA or anything like that. We got to buy it from the beginning, and then there's all sorts of strategies on how we can do things to create income tax-free to the IRA from that point.
Yep. I have a whole boot camp on that called Quick Start Real Estate School.
Great school.
Do one every month.
Ron, question for you.
Yeah.
How often when you're talking to people that are coming to you to learn how to do real estate, whether it's with an IRA or personal funds that they have, do most of them have full-time jobs or they're now retired and did have a full-time job? Do most of them have jobs?
Most of them had jobs. I get a lot of seniors in my events.
Okay.
Maybe because I'm one of them, I'm not sure, but you find most of those are not even employed.
Yeah.
Younger people in there are likely employed. I get a mixture of both from all kinds of professions, from brain surgeons on down to the unemployed.
The reason I ask is this is important for all of you that are listening, because we did talk about contributions, but it's what's called an employer rollover. Most of our clients that are looking to use an IRA, yes, they may have their own small business and they qualify to do a solo 401k because they don't have any full-time employees and they got a small business. And you want to do larger deals or just more deals. Like I want to go buy 5, 10 properties, maybe I want to buy 5 junkers that are 48K each. If you have an old employer plan, like that's an old 401k and you used to work at Boeing, like my dad worked at Boeing for 30 years, he's no longer there. He can do a rollover to an IRA with us. So let's say you had, $1 million in that old 401k with Boeing and it's still over there, probably with Vanguard or Fidelity or something. He could take half that and put that in an IRA, still leave half over there, but now he's got 500,000 in an IRA with us that he can go deploy into real estate. And he could just do as many deals as he wants, all tax deferred or tax free, whether he decides to convert it to Roth or keep it tax deferred as a traditional IRA. So don't forget that strategy for those of you that are listening that have jobs or did have a job and have that old 401k that's still out there, that you can get access to those funds and move them outside of the stock market and stocks or mutual funds and start self-directing
and
real estate.
Yeah, and I'll add this because again, Ron is one of the educators that really pushes these accounts, and I love him for that. Which is there's non-retirement accounts too that can be used.
Yes,
I mean we're talking about traditional Roth and solo K, but we have 2 plans that have nothing to do with having earned income or any of that, which is the self-directed health savings account and the education savings account. And I would say, Ron, a lot of your younger students gravitate more towards these because, maybe they're not thinking about retirement because it's 30, 40 years out, but they've got kids, they've got healthcare expenses, and you're a big proponent on, hey, it doesn't matter what account you use, it's tax-free regardless. So if you want to start, buying $100 junkers or signing some contracts, you can also do that through a $100 EMD from your self-directed health savings account.
Yes.
Or a $100 EMD from your son's education savings account. And that profit comes tax-free and is available for immediate use to pay for your family's healthcare expenses and education expenses for your kids or your grandkids. I mean, the account types, when you really look at it, not only fund retirement tax with tax-free dollars, but pay for current needs with tax-free dollars through strategies like yours.
And there's more ways to grow that thing than in real estate as well. You can make almost any investment you want to make. There's just 2 or 3 exceptions. Alcohol is one of them. Coin collections is another one, unless they're American minted.
Yeah.
I don't know. There's a couple more.
Yeah. When it comes to real estate, there's no restriction other than you cannot buy your own property with your IRA. Outside of that, I mean, real estate strategies are almost endless when it comes to using your self-directed plans.
Let me say that again, guys and gals. No, you cannot get yourself an Airbnb and go spend a week in it if your IRA owns it. No, you cannot live in any house, nor can any of your up and down relations, and including your spouses, live in this house. They can't have anything to do with this house, including you. And in fact, if you write yourself a check for $10 out of your IRA account, you're violating the rules. And,
right.
I'm not going to do it today, but when I see you, I'm going to show you why your IRA should own an LLC and let the LLC do all the business, further protecting your IRA. Also, not going back and forth every time you need $10. Just have your LLC write a check.
Right.
All right, guys, explain the exact process of buying a house in an IRA or flipping it, whatever. First, you got to have an IRA.
First, you got to have an IRA. Then you got to fund it. Right. You can either make a contribution, right, directly to the account. Again, what's the contribution? It's any contribution you want to make, $10, $50, $100, or you can transfer money from an old IRA, kind of like what Aaron was talking about, or roll money from an old 401k. You don't have to do the entire amount, just whatever it takes to get the investment funded that you need bought through your directed IRA account. But there's different ways, and I think I'll leave it to you here after. But there's different ways that we can take title to the property that's ultimately owned by your self-directed plan. Now, so one way, which is not the way we're going to end here, but one way is you can just have the IRA be the title owner, right? The IRA can be on the purchase contract as the buyer. We sign the contract as the custodian, right? And if you ended up buying that property or owning that property, the IRA would be on the title and we'd hold the deed. Or you can have an
Stop right
entity
there.
in between.
Stop
Go
right
ahead.
there.
Okay,
I want
go ahead.
I want to erase everything you just said. That's not the way you want to buy houses.
I'm not saying that you want it. I'm just saying that's one way to do it. But okay.
Just write this down, guys and gals. One egg, one basket, never more than one egg, one basket.
Yeah.
The minute you put your IRA on the title on public record, and for something were to happen on that property that the IRA owns, it affects entire IRA. That's one of the only two people that can take your IRAs away from you is if you're doing something like put it in on public record as the owner. Now it's liable for anything that happens on that house. We don't do that. No, we don't do that at all. And then the IRS is the other predator can take it. So got to understand these rules.
Right.
I'm glad you brought that subject up because I wouldn't even think about it. People come to me all the time and somebody told them to put the title on the
and by the way, I'm not telling them what they have to, but that's one way to do it. Or, we put an entity in between where the IRA is the owner of an LLC, right? And we can even set it up through our law firm, KKOS Lawyers, our sister company. You can even manage the LLC now. There's some caution to that, but you can manage the LLC as the manager. Yep. Your IRA is the owner, or your IRAs are the owner. This LLC can be owned by one account or multiple accounts. But what this does is now the LLC is owned by your accounts. The LLC is going to be on title. The LLC is going to be the buyer on the purchase contract.
That's not true either. We're going to put the land trust.
I know. You're going to do the land trust.
That is owned by the
entity.
LLC.
Right. There's an entity in between there. Yeah. So you can do it one way or another. Ron's a big proponent of Nate, not having your name on title or having the IRA on title.
You know that everything you just said went, don't you? All right. So listen, for simplicity's sake, land trust owns house. LLC owns land trust. IRA owns LLC. If you can just remember that. And then we're going to move on here. So how do I go about buying? It's really very simple. You once you got an IRA set up, you just go in there and fill out a direction of investment form and tell them where to wire the money or mail it to you, right, guys?
Yep.
Okay. That's why I like having my IRA owned by an LLC. Then all I got to do then is have my LLC write the same check, and I don't have to go through them to get it. Saves a lot of time and a lot of grief. I just said that, didn't I? All right.
Hey, repetition's a law of learning. So we got to hear things 7 times before we take action sometimes.
This does not say make offer in your IRA. It says make offer in the name of your IRA owned LLC. So your LLC is the one that's buying your LLC is the one you want to take title in, but technically IRA owns the LLC. Therefore, you got to comply with all the rules of the IRA within your LLC. I mean, just look at it like another LLC. You guys want to go over those rules real quick? Well, how can I get in trouble doing this stuff? What's the biggest mistake?
There's things that cause what's called prohibited transactions. The biggest thing is your IRA engaging with a disqualified person. So again, like we said, your IRA cannot buy your own property, right? You're the fiduciary to the IRA. It's a conflict of interest for you to sell your own personal items to your IRA. There's other people that are equally disqualified as you, the IRA owner, which would be your spouse, your parents, grandparents, and then up the line and then down the line with kids and grandkids and their spouses. The reason why the IRS doesn't want those individuals transacting with your IRAs, those are either the account owner or it's probably the person that's going to get it when you die, right? Wealth usually passes to the spouse and down to the kids through inherited IRAs. So they don't want you transacting your IRA with those people. That would create a prohibited transaction. You'll lose your IRA. You don't want to do that.
Another thing would be a step transaction for those of you that are really clever, already thinking about different ways to get your IRA involved in property you already owned. An example of that would be I own a property I'm now going to sell it to Nate, and Nate's going to go ahead and now I'm going to use my IRA to buy it from Nate.
Right.
That would be a step transaction. That's also a no-no because the intent was to then get a property that you had into an IRA. And there's plenty of cases out there that go over that as being a no-no.
Basically, you can't do the same thing in 2 steps that you're not allowed to do in 1, is the basic premise of that. And then the other thing is you cannot use the assets owned by your IRA for personal use. So you can't own a property in the IRA and then you go live in it or rent it to your kids. Now you can rent it or sell it to family to the side, but again, that's another topic for another day. Do you want to sell property to your brother? But family to the side are not typically prohibited to transacting with an IRA. Up and down and spouse. So as long as you stay out of transacting with disqualified people, it's very hard to argue that something is prohibited besides the 2 investments that we mentioned, collectibles and life insurance contracts, which we wouldn't allow you to hold anyways. But when you're using an LLC, we don't have line of sight. So you want to make sure you understand that just because you set up an LLC owned by your IRA doesn't allow you to do all the things you're not supposed to do.
And the IRS is one gorilla you probably shouldn't be dancing with.
Right. They say if the IRS is knocking at your door, you're already lost. So you don't want them even knocking.
You know, they got endless money and you don't. And, you know, they ain't easy to deal with if you piss them off. So, really simple. Just learn the rules and don't violate them. Don't try to get around them. You know, they'll catch you. In fact, they got people looking for, they got people hunting down IRAs LLCs that are owned by the individual's IRA because they know you're going to break the law. That's easy pickings for them. You can't pay yourself $10 out of your IRA unless you want to take it out and under normal circumstances. And by the way, you can't take any money out of LLCA.
Yeah. And let me mention something to that. Yeah. And what he's referring to is you're not allowed to personally be compensated for the investments owned by your IRA. So you can't manage the LLC your IRA owns and then have your LLC pay you a management fee. You're the fiduciary to the IRA. You're supposed to work in a fiduciary capacity. You're not supposed to get paid for being the fiduciary. Your benefit from the IRAs or all the plans that we mentioned, you get your benefit from the distributions you take from the IRA, but you can't have the asset pay you. You can't take the rents into your own pocket. All the benefit from your IRA's investment must first flow to the IRA and only the IRA. And then you take distributions when the time is right to take distributions from the custodian that holds the IRA. So for example, I've got a Ron LeGrand student that owns 12 properties in his Roth IRA, Ron. And what happens is there's 12 renters every month that pay rent to the Roth IRA. The Roth IRA is the owner through a land trust, through an LLC that owns a land trust. But ultimately the rental income is coming into the Roth IRA. That's the owner. He's above 59 and a half. He's had the Roth for 5 years. So he has now what's called qualified distributions. All he's doing is having the renters pay rent to the Roth, and then he takes a recurring distribution every month, and he's never taxed on the distribution. That's how you want to play this game. Invest your IRA into assets that appreciate in cash flow, and then you, when the time is right, live tax-free off the distributions. He's off the grid. The IRS will never touch him. He'll never owe a dime in taxes for the rest of his life on those assets owned in his IRA.
We probably better mention that forbidden group also includes any entities that you control.
Right. Any entities that those same people control.
And your spouse is up and down as well.
Correct.
All right. If the money isn't in LLCA, which is your IRA-owned LLC, transfer it from your IRA to your LLCA, or have your trust borrow it. I don't know what trust I'm talking about there. Put funds in LLCA, non-recourse only. I don't matter whether it's non-recourse or not non-recourse. If you buy it in your IRA, you're going to get taxed on it when it sells.
And this is what we talked about when now here's the cool thing about real estate that he's mentioning here is you don't have to have all cash in the IRA. You can structure either a purchase on terms, meaning let's say the IRA is going to put down or IRA LLC is going to put down a down payment. And maybe there's banks that will finance the IRA. There are banks. We've got a list of banks on our website. We call them non-recourse lenders. All that really means is the bank that's going to loan to your IRA is only going to have recourse to the property. Okay. If you guys are real estate investors, if you're familiar with the DSCR loan, these banks really work it like a DSCR loan. They just say, show us the property you want owned by your IRA or IRA LLC. We'll tell you how much down payment we want so that the rents in the area are above the mortgage payment. That way, if we end up with the property back as the bank, we feel comfortable. But it's an asset-based loan. The bank has recourse to the asset, which is the house, but they don't have recourse to you, the person, and they don't have recourse to the IRA either. So as long as your IRA can leverage bank financing through what's called a non-recourse loan, or you structure a deal on terms to where maybe there's the seller's in a predicament where maybe they can't sell at retail, but they're willing to transfer ownership to you and you can make payment, or your IRA can make payments to them through seller financing, or maybe you take over the payments somebody else has because they can't make the payments on their own. We talk about that taking over a property subject to. All of those strategies can work in an IRA, but when your IRA has debt on the asset, the debt is taxable, not the investment the IRA puts in, but the debt is taxable. But here's the thing. It's not something to be scared of. Go back and watch our other webinar with me and Aaron where we talked about buying real estate with and without debt. You'll find that oftentimes just because the IRA has to pay a tax does not mean the tax is very large. Because as soon as your IRA pays a tax, guess what your IRA gets to use? Expenses to offset the income, depreciation. And if you play your cards right, even if you hold the property long-term in the IRA, if the debt's paid off before you sell it, sometimes you pay zero capital tax on the debt as long as there's no debt when you sell it. So there's a lot of different ways to minimize it. Or what I tell Ron students, if you're self-employed, do all those creative strategies, all those buying on terms, do them in a solo 401k, and you don't have to worry about the tax on debt ever.
Hey, that took a long time, but well said.
Sorry. Just want to make sure people are clear. It can get a little hairy sometimes, especially for the new viewers. I'll let you take it away.
Can't borrow money from your IRA. It can't lend you money. It can't borrow money from you. However, that's not true with a solo 401k, which I think we're going to get to today. But anyway, if you want to grow tax-free, there's a way. And all you got to do is learn from the source here what that way is and what best suits you and your investment plans. How many deals can an IRA do in a year?
Unlimited.
I think you better worry about your first one before you worry about how many you can do. But the answer is there's no limit. But if it looks like a business, it'll pay taxes on profit. I get this all the time. I had a guy just the other day. Oh crap! I forgot what business. It was real estate related, but it was still a business. You're going to get taxed. IRA can own a business. What other rules other than that?
Well, it can own a business. Yeah, it can own a business. It's just whether that business is creating operational income, or it looks like you said, if it's not rental income or lease income and it's operational business income, well, the IRS already thought of that. They go, if you're running a business in your IRA, we're going to tax it like all the other people that running businesses. But if you're investing in real estate, typically real estate, especially real estate that's owned long term, and what I mean by long term is a year and a day. It's not considered a business, it's considered an investment. So as long as the IRA is making investments and it doesn't look like a business, then you don't have to pay any taxes. Now, when we talk about the debt piece, that's a different type of tax. But in most cases, Ron, if we're buying and selling real estate and we're holding it longer than a year, we don't have to have any worries about it looking like a business.
You mean even in your IRA?
Oh yeah. Yeah. Usually the business activity comes from flipping property. So, and there's even some, CPAs that will say, as long as you flip 3 or less or 4 or less, the IRS isn't going to deem it what they call dealer property, like it's a business. So you can even flip a couple properties in an IRA and it's not a business. But if you're flipping 10, 15 properties and they're all sold within a year and a day, then that could be the act of running a real estate business, not doing real estate investment.
You're telling me then I'm not going to have to pay. My IRA is not paying taxes if I keep the property at least a year or more.
If Right.
Huh?
If there's no debt on there, right? Because we're talking about two different taxes. We're
Oh,
talking about the
there is,
UBIT tax as a business, or we're talking the UDFI tax on debt.
but there is debt on it. I take over a mortgage and I put a tenant buyer in it for several years.
Mhm.
Am I going to get taxed on it?
If it's in an IRA, you're subject to tax. Now, the question of like, do you have to pay a tax? That really depends, because if your expenses are equal to your income, I mean, your net income is zero. So just because your IRA is subject to a tax doesn't mean it necessarily has to pay a tax. The bigger tax for the real estate investor is not off the income. It's on the capital gain when you sell the property. And when you sell a property that's owned by an IRA and it has debt on there, the IRS only looks back at the 12 months prior to sale. So in a perfect world, if you took over a property, and I have a Ron LeGrand student that bought 5 properties, all highly debt leveraged. His whole plan was, I'm going to buy these properties subject to, they had little to no equity. All the beginning investors were passing on these deals. And all he had to do was put money up from the Roth IRA that covered the past due mortgage payments and some of the property taxes. And the owners deeded the property to his Roth IRA. Now he put in tenants of those properties, but he's held these things for 12 years. So these notes have been paid down and paid off, and he hasn't sold them yet. They're pretty much all paid off. When he goes to sell those properties and there's no debt for the last 12 months, there's nothing to tax. So even though he started by acquiring these properties almost 100% debt leveraged, because he's held it for so long that the notes have been paid off, he'll still pay zero capital gains tax because there's no debt in the 12 months prior to sale.
Okay, that's not my question.
Okay, sorry.
So in other words, I'm still going to get taxed if I sell it. 10 years later, but the mortgage hasn't been paid off yet.
If there's debt and if it's in an IRA, but if it's in a 401k, no tax.
Okay, that's all I wanted to know.
Yeah.
How
Okay.
simple that was. All right.
Nate will answer the question beyond the question.
I apologize. Just trying to make sure people are clear. You know, it could get a little hairy. But this is how I learned it. I learned it by overhearing it. So go ahead, Ron. I apologize.
Does the trust have a different tax rate than the individual?
Can I talk now? Okay. Yes, you can chime in too. Yes, the IRAs are trusts, so you have to look at the trust and estates tax bracket, which could be quite higher than our personal income tax bracket.
Right. I'm gonna move on here.
Okay.
People come to me sometimes and say, I've done screwed up my IRA. I'm breaking all these rules. I didn't know they existed. If I get audited, I'm going to get clobbered. What do you tell them to do?
Well, that's a difficult question on a live webinar. I would probably say,
I'll take it.
Go ahead. You take it.
Yeah. So really go get an attorney that knows self-directing and ERISA rules. Go get an ERISA attorney, essentially, is like the short answer. The longer answer is you could take certain steps to rectify what you've done, basically backtracking and unwinding certain things. And there's lots of different things, but
I would never suggest anything that involves a tax return doing that.
Yeah.
What if they just go open another IRA and start working with it?
Well, you most certainly can do that, but you're not transferring any of the assets from what mistakes you made in that other IRA. You're not going to then move that to the other IRA. You're going to have to.
It makes sense to go start another one.
It would.
You don't have to kill this one. You don't have to transfer it. Like quit doing business in it.
Yeah.
Yes, because what would happen is whatever investments that IRA that you messed up or did some prohibited things, those would be the assets that would be in question.
Yeah.
Yeah.
All right. So what is the penalty, incidentally, for breaking the rules on dealing with people I shouldn't be dealing with?
Well, the biggest penalty is they'll distribute the IRA and you'll receive a 1099 for it.
Yeah.
So you'll pay taxes no matter how far you can go back to the very beginning, can't they?
Yes. Yes. That's the biggest issue.
Yep.
Yeah. Okay, is there a limit on the profit we can make?
No, sir.
No, sir.
Make as much as we want. That's the thing people have a hard time understanding.
Yes.
Only can think about this $6,500 max to contribute. You ain't gonna live long enough to get rich in your IRA if that's all you can do.
Yes.
What can my IRA buy? What can't it buy? Do you have a list there?
Well, it can buy anything except life insurance and collectibles. We kind of talked about that. So those are the only two things you can't buy.
And or S corporation stock.
S corporation stock, because S corps have to be owned by living, breathing people.
And that wine tequila collection.
Yeah.
That would be a collectible. Can't do that.
Because those wine collections turn into empty bottle collections. So they don't want those owned in an IRA.
But yeah, anything, precious metals, oil and gas, cryptocurrency, private stock with, with private entities, lots of fun stuff that you could do. Equipment leases, lots of good stuff.
There's very little you can't buy, but the rest of it is wide open.
Yes.
I heard of a guy one time, he was having calves, had cows in his IRA, had calves and sold IRA, sold the calves.
Yeah.
So,
Yeah, we got that here.
Yeah, Mark Kohler has a cool podcast and actually live webinar he did talking about buying cattle with his health savings account.
Yeah.
Okay.
So it's pretty cool.
There it is right there. I didn't know I had it. There's what you can't buy right there if you want to take a screenshot of that.
Yep.
I mean, in your IRA.
Yep. And those are the collectibles there. Yep.
They can certainly buy gold in their IRA, can't they?
Yeah, and they can buy metals. There has to pass a certain test.
Purity.
Yep, certain purity. We have a lot of clients that are highly invested in gold and silver and things like that. So, but there's certain things that are considered a collectible that can't be.
Gold has hit the $3,000 an ounce mark.
Yeah, we saw. Yeah, we've been paying
dropped
attention.
a little this week, but the $3,000, a little old coin's worth $3,000.
Yeah,
that's
wild. As far as back, I bought gold at $297 an ounce.
Wow.
And then I invested it in a restaurant. All right. We probably said enough on UBIT. Anything else you want to say on that?
No, we talked a lot about that. And again, UBIT's not something to be scared of, just something to be aware of it. So if you're ever concerned about it, just pick up the phone, book a call with me. I'll talk to you about it.
And there's a calculation for how to calculate the UBIT. If you go to Matt Sorensen's Self-Directed IRA Handbook, he has some examples in there on how to calculate it. So it's not the end of the world.
Yeah.
Okay. So any debt, whether you buy the debt or else you create the debt while it's in your IRA, any of those is subject to UBIT. Unless you lease option the property. And it's not debt. Does that mean I shouldn't do terms in my IRA? Well, I'd say that's kind of an individual decision. Knowing you're probably going to pay taxes on it when it sells, you make an awful lot of money between now and then on it. And even then, when it sells, you're going to get taxed at long term. Actually, are they going to get taxed at long term or not?
If they hold it longer than a year and a day, the taxes turn to long term capital gains, and they're no longer within the trust rates.
One good thing about that kind of a thing to put in your IRA is that it keeps on churning money with you doing nothing, unlike some of the things that you have to be on top of, like buying stocks or whatever. I love real estate for that reason. It's going to keep on making me money when I'm sick, when I'm tired, when I'm dead, when I'm out of the country or what. I did it once and it keeps on churning and burning. That's called a residual income. And now make that tax free. And, God bless the IRS. Bet they don't hear that a lot, do they?
No. And I'll just say this. I mean, if you're looking at the calculation, all you want to factor in is how much money is your IRA invested and how much return is it getting after the tax. That's your cash on cash return right there. If your cash on cash return is higher with the debt, even after paying the tax, it's a math problem at that point. So
what my favorite rate of return is?
What's that?
Infinity.
Yep.
Don't have any money in it, can't measure the returns. All
right.
It's all infinity rates of return. And we do that a lot in real estate. A lot. Take title and pay taxes when sold. That's option one. Balance does grow tax-free for the rest of your life. Option two, don't buy it, lease it. Not a debt, doesn't trigger you, but or use a solo 401k. Now, this is what I'm telling folks to do if they can qualify for one, and if they want to put terms deals in a tax-free entity, they can do the 401k instead of the IRA and never pay taxes for sure. Plus, you can borrow money from your 401k. It can loan you money, and it doesn't trigger you, but you can hold a checkbook. Is all of that correct, gentlemen?
That's correct.
Yes.
Right? Then what's qualifications for a solo 401k?
Well, you got to be self-employed. You got to have some self-employment income and no common law employees. So typically no W-2 employees.
You can have contractors, you can have part-time people, but not full-time employees other than, like, let's say a business partner or your spouse.
So it is, you can do you and your spouse and that's it, correct?
Or you and a business partner.
Yeah, other owners.
Yep.
Well, I don't have a 401k simply because of global employees that it has.
Yeah. Are they contractors or are they W-2 full-time employees?
Well, employees are W-2.
Yeah, they're W-2.
Yeah.
But they're not 1099.
Right.
No.
Yeah.
All right. We've been over this catastrophe of self-dealing and prohibited transactions.
Just don't
That's
do
going
it.
to get the government down on your back. And the truth is the odds are with you, but I don't like people putting skeletons in their closet and forget they were there. And 10 years later, they figure out, oh my God, I forgot all about that thing.
Yeah.
And that's exactly what could happen. You can't make $10 out of your IRA unless you take it out of this distribution. Okay, we talked about that. You talked about that. Cannot deed anything to your IRA, can only have cash.
That'd be same thing with the 1031 exchange. You're not 1031ing into an IRA or a solo 401k because those were not retirement funds in that 1031. A few people asked that in the questions.
Dance with a gorilla. You're not going to like the end. Covered that. Cost can be more than the IRA even has. When it get, do you ever seen the IRS levy penalties plus interest, and actually is more than what's in the IRA?
Well, personally, I've seen one person get audited, and a lot of times where the audits come from, it's not what they did in their IRA, it's what they did outside of their IRA, which would cause somebody's filing bankruptcy and they did some things outside of an IRA and trustee sees a big IRA there. They go, well, that's federally and state protected, the funds in your retirement account. That's one of the good things about a retirement account, unless a smart trustee finds that you did something prohibited in the IRA. So a smart trustee will go and they'll ask the custodian, hey, let's get the documents and let's see if this person ever messed up. And they can go back as far as you want. So this is why, again, Ron says, don't dance with the gorilla. Don't do anything because your IRA is so protected and it's such a tax haven. You don't want to mess up with the rules there because there's so many ways to do deals without breaking the rules. So I've only seen it once, Ron, and it was, somebody that, did a prohibited transaction 7 years ago. They were doing all sorts of shady stuff outside of the IRA. Smart trustee found them doing a prohibited transaction. They were able to force distribute their retirement account and pay all their debtors. So you just don't know when it's going to happen.
Just like an attorney going to go after your LLCs, trying to see how you violated the rules. One of those, of course, is if you pay your personal bills out of an LLC, you don't have an LLC. Right. So you're absolutely, that's what they go after, all the stuff that you've done and that you shouldn't have done, and use that as their whole case. I've had it done to me, just for the record. They lost, but I had it done to me. All right, been over that. Can't loan or borrow. Can't guarantee debt, but it can borrow money. Like they told you earlier, there are banks now that will lend money, non-recourse money to your IRA. So you're not personally liable. I don't suggest you do that, frankly. It's so fast and easy for you to build that cash in your IRA by just flipping, like I said. There's no reason to actually make a loan, in my opinion, but then, I'm sure there's always some reason why you want to do that. I teach people, guys, not to go down and personally guarantee any debt inside or outside their IRA, because I've been around long enough to see what happens when you do too much of that. And you are going to build your house on a house of cards. All you need is something to go wrong that's not even your fault. It's going to start collapsing on you. All right, let's move here. The rules are simple. You break them, you may never get caught. But if you do, you're in deep caca. So just don't do it. Just learn the rules. That's all I'm saying right now. Don't dance with that gorilla. Guys, I don't think we've talked enough about Coverdale IRA for your kids. I think we should probably tell people how to put their kids through college and not have to write checks.
Yeah, I mean, we've got a self-directed Coverdale Education Savings Account, which, you know, if people are familiar with the 529 plan, it's an account that grows tax-free for distributions for education expenses for your child or grandchild. But the CISA, the Coverdale Education Account, is the only one that can be self-directed. You cannot self-direct a 529 plan. 529 plans are great. But if we're talking about, you know, $100 deposits and things like that, you know, when do you need to use the money? If you've got kids or grandkids and you're paying tuition and books and computers and tutoring, you're paying that out of your back pocket. That's your most expensive bucket of money. That's the taxable money that you've got. Instead, if you can throw a couple $100 or throw $1,000 and let's say your son or daughter's CISA account, have the CISA, you know, buy a property on terms or sign a contract. Well, all the profit goes back to the CISA. Well, here's the cool thing. It doesn't matter how much profit there is. The CISA is tax exempt. As long as you use the profit to pay for their education expenses from pre-K all the way through college. So again, I've got another Ron LeGrand student. He did a $500 earnest money deposit out of his son's CISA account, assigned the contract to an end buyer 8 weeks later, made $30,000 as an assignment fee. The CISA got the assignment fee because the CISA was the buyer on the contract. And he immediately paid for a full year's of tuition without having the 30 grand taxed. Had he done the investment in his name personally or in his LLC, he loses 40% of that to Uncle Sam just through taxes. So all he did was the same investment in a different account to pay for the same expense, but he kept about $20,000 of tax-free money that didn't have to go to Uncle Sam. It can be reinvested and pay for future expenses.
And those contribution limits into the CISA are so small, only a couple grand a year. So doing these creative real estate strategies that Ron's talking about today is really ideal for this particular type of retirement account.
Yeah. Yeah. And I would even say you can strategize, you can pick and choose the investments that pay off in 8 weeks. If you've got health expenses and education expenses, do those deals in those accounts so you can use the money right away, and maybe do some longer term deals or whatever which shakes down to be. Maybe they do those longer term deals in your Roth where you can't use the money until 59 and a half anyways. You can strategize based on your need for the money.
One thing we better mention is you got to get a CISA open before your kid is 18 years old.
Yes.
Correct.
Your SOL. And I'd open one for every kid you got. I don't care, put any money in it, right? You can put a little bit of money in it. But remember, if they just had $100 in there, you can go flip a junker.
Oh, yeah. All the way through until that child's 30.
And grandparents can make the contributions for their grandchildren as well. So that's why Ron has that up there on the slide. So grandchildren as well.
I understand that I can make them for anybody with a parent's signature.
Yes, you can.
Yeah.
Yeah. Ron, I have 6 kids, so they need an Uncle Ron.
Do they have 6 CISAs?
They do.
They do.
Well, no, they need you to come and listen to Uncle Ron. Then you go back and tell them what they need to do. All right. Here's one you guys. Just the other day, I got this question. My mom is not working. Haven't been working for a long time, and I can't get her an IRA because she needs, retirement income. She needs earned income. You guys know how to handle that?
Well, that's more of a, I would say, a tax consulting question, is whether or not you can create them earned income or have some sort of income, but there's a whole nother.
Baloney.
Yeah.
Just take one of your LLCs and pay your mom a salary a little bit, and she can contribute that to her IRA. you probably should be paying your mom anyway.
Yeah, they're
Took
and
care of
they're
your whole life.
yeah, they could do administrative duties,
Yeah.
bookkeeping,
Yeah,
all that good
yeah.
stuff. My grandmother's in her early 80s and she's great with the finances and the books.
Yeah. There's the other end of the spectrum too with that, Ron, is, putting your kids on payroll too, not just the parents, but the kids, and having minor Roth IRA set up for them. We have a lot of clients that do that as well.
Okay. All right. Pay them enough to open an IRA with from your LLC. Make sure it's labeled on your books as salary or whatever. Is anyway, another way they can label it. Got to be earned income. You guys think of anything else that they could call it?
No, it just has to be W-2 income, Schedule C income, 1099 income. It can't be disability income, Social Security income. That won't qualify.
Anything
Okay,
administrative.
so it can be 1099 income.
It can be.
It can be.
It can be.
Good.
Yep.
So I can see your mom cleaning out the next junker you get.
Yeah. Anything
what-
like management, administrative,
Yeah.
consulting, hands-on, handy person stuff, all that. Great.
Got it. Set up a Roth IRA for them with that money. And now you know what to do. Get out there and do a deal for your mom. You owe it to her. I just said that, didn't I? Okay. And they can take that money out anytime they want because they are already over the age where they had to pay taxes taking it out.
They do have to have the 5 years though. So just again, this is why it's important to set up a Roth and maybe make a contribution for 2024. Because if you don't have the 5-year clock ticking yet, you need both those above 59.5 in 5 years.
There you go.
So
slides up there.
There it is. Right
Ron
there.
beat you to it.
Yep. There you go.
If you're going to do this, you better do it very quick for April the 15th because you're right there right now.
Mhm.
And literally what he just said was you get the whole year of 2024. Now you're down to only 4 years left.
There you go.
Early withdrawal penalty. And I wouldn't worry a bit about the early withdrawal penalty. Trust me, you're going to save a lot more money than the 10% it's going to cost you to take the money out anyway. All right. By the way, that 5 years starts whenever you open that Roth.
January 1st. Yep. When you make the contribution. So if you make it for 2024, your start date's January 1st, 2024. As long as you can get that contribution in before the 15th.
But if they opened it 6 years ago and haven't done anything since, it's still.
They've probably eclipsed
right?
that. Yep.
All right. No taxes. But Ron, my IRA's broke. How does this apply to me? Well, I'll say it again. How much money did I need to do those 5 wholesale flips? Answer, $50. $50. Okay. All 5 of them combined, $50. I'm guessing you can raise $50 somewhere. If you can't, please let us know. I'll be your partner and I'll give you $50. No, I'm just kidding. But there's all kinds of deals you can do in your IRA without your money at all. And again, if you want to buy a junker and renovate it, as long as that money is non-recourse, you can do that as well. But I just don't think that you should be renovating houses in your Roth IRA. It's too complicated. You might make a mess. You got so many other choices you can do in there. One of my favorite is wholesaling houses. Instant cash almost, big chunks. Learn how to buy properties right. You don't have to touch the house. You don't even have to insure the house or anything like that. You can literally put that cash in your IRA the day you get it. In fact, you're going to have to put the cash in the IRA the day you get it. However, I will differ with anybody that says put the IRA on public record as the owner of the property. And from an asset protection point of view, that's an extremely dangerous thing to do. There's some right there. Rehab, lease option. Remember, you get that big non-refundable deposit goes in your IRA. So in fact, the big non-refundable deposits that we get on these houses, most of the time is more than we get if we bought a junker and rehabbed it. And we didn't have to touch the house. I'm got one right now like that, guys. I bought it for $440 and with owner financing. And it's worth $5.25. We're putting it on the market as we speak here. And I'm going to do it with, I want at least a $50,000 non-refundable option deposit out of that house, which is less than what somebody would have to pay if they went down to the bank and got a loan, because it's under the FHA, I mean, over the FHA limit here. So I'm dealing only with the people who have a problem. 75% of the marketplace cannot qualify for a loan at the bank to buy a house. I just got an article on the internet the other day that 45% of the people that applied got turned down. Therefore, I know there's at least 75% that can't get a house. They know they're not going to qualify. They don't even apply. So in the world of lease purchases, that makes me the gatekeeper between those two entities. And trust me, I can sell a house on lease purchase 10 times faster than I can sell one and cash out of it. So come see the old guy. I'm going to show you how to make the fastest and the easiest money in real estate that there is. I've done over 3,000 houses. I probably should figure it out by now. All right, yeah, tax deferred. So, yeah, you can use my 401k, but you're going to be limited to the rules of that 401k, aren't they?
Yes, and if you're talking about current employer or old employer 401k, it's a little different. But if it's an old employer that 401k, you don't work at the company, that can be rolled into an IRA, usually a tax deferred IRA. We talk about conversions later. If you're still working at the company that set up the 401k for you, call them, ask them if they allow for in-service rollovers. If they allow for in-service rollovers, you can roll some money out even while you're still working at that company. Very rare, but it's possible.
Okay, and we could just answer this one. Yes, you can hold the property long term as long as you understand the rules when it's sold.
Mm-hmm.
What should I do with the cash in my IRA? Well, you make a big check out to Ron LeGrand and then send it, and I'll send you back the answer to that question. Now, look, true, believe it or not, ladies and gentlemen, this is a problem that people have a little money have in this country. And you might think, well, big deal. Let me have that problem. Well, the answer is, what do you invest your money in if you don't get schooled on what to do? Buy the stock? Well, sometimes that works, sometimes it don't. And it's scary and you don't know what to buy. And most people lose money in the stock market. But when I go buy a house, for example, I'm way below market value if I'm paying cash for it. It'd be very hard for me to lose. So in other words, I think you should make a list of deals that you can do that the risk is almost eliminated, and the real estate is full of those. Then you got all those things outside your IRAs as well. You can even make a loan to your brother. Not suggested, but you can. There's a list of them. Get ahead of myself. If you guys want to take a screenshot of that, go ahead and do it, because you can do anything on that board you want to do. Oh, tax liens is a good place to use your IRA for as well, because the government's paying back you 15-18% or more on that, the money you put into that tax lien. I also love
we had somebody set up an IRA LLC just specifically for tax liens, because it just made the process easier to go, down and go buy them. So again, there's a solution for that. Any real estate can be bought and sold in an IRA LLC.
Yep. So that's not even a long list. There's a lot more things you can do with the money than that. So don't worry about what you're going to do with your money. Get it first, and then we'll talk. Should I talk to my accountant? Well, of course you should, if you have tax issues, but not about this stuff, because he or she won't have a clue on it, unless you get really lucky. Why? Because they don't know how to buy real estate without using your money or your credit. Most people don't. If you don't acquire that knowledge, then you open your IRA, you're just not going to make any money with it. It's just going to sit there, not grow. So you're the one that's got to make it grow. You're the one that makes all the decisions. These two guys you're watching right now won't make any of those decisions for you. All right. I'm going to give them a great deal right now, guys, with your permission. I mean, like a great deal.
Yeah.
Because I happen to have a course on this that sells for $9.97, but you're going to learn all the stuff you want to know. You're going to learn more than you need to know about IRAs. In fact, what you're going to learn in this course is going to make you heads above anybody else in your industry and wonder how to work with my IRA and why should I do it and all of that. Because I put all of the mistakes that I ever heard of in this course as well. Step-by-step instructions how to work with these folks here. and how to leverage your IRA with real estate and not break the law doing it, and why your contributions are irrelevant. That's one that I have a little trouble getting across to people. They say they understand it, but I can tell they didn't. It's not about contributions. Where can I get more information? Would it surprise you guys and gals that I have a course on IRAs? You think?
Not at all.
$397 for that entire course. And if you don't think you want it, you don't like it, you can send it back. Got 100% guarantee for 30 days. And I'm going to give you my land trust course. I'm going to give it to you. It's also a $995 course. And I'm going to tell you why I'm going to give it to you. Because you got to be very careful on how you take title to these properties if you're going to actually buy them. And it's very easy to slip up. You're going to take title to all of your houses in one land trust in all 50 states. One house, one trust, one egg, one basket, one house at risk. And again, no way you're going to put your IRA on public record as the owner of that house. Land trust owns house. LLC owns land trust, and your IRA owns LLC in this case. You're going to do the same thing if you're outside of your IRA. You still have land trust buy. The LLC gets all of the money and pays all the expenses, and you are going to own that LLC, not your IRA, but even that's going to require discussion on how you can own that LLC to keep predators from taking away a life's worth of work. Can't tell how many times I've seen people come to my seminars and want to talk to me personally. And frankly, some of them I was over talking to them and they bust out in tears because they made one mistake somewhere in the past and wiped out everything they got because of some accident or something that happened unexpectedly. So I want to set you up so you don't ever have to worry about a predator come taking your asset, even when they know you got it. It's not about hiding stuff anymore. You can't hide anything. Right? And land trust is a getting piece of that puzzle. So I'm going to give you that course. I'll better write down that promo code though.
And I want to give you a plug real quick, Ron. And again, guys, this is not, selling an investment. This is really, education that he's providing you.
Yeah.
I've spoke at Ron's events for over a decade now, and one of the things that's tough for us as a self-directed IRA custodian is a lot of people look to us as if we're going to tell them how to structure their deals and where to find them. Yeah. We can't do that. We're a passive.
What are our next steps?
Right. What do I invest in now? That's for you to tell us. So, Ron has been the bridge between that, right? He's bridged that gap for people to learn not just learn about real estate in an IRA, learn about just real estate in general, right? Most of Ron's students, in my opinion, they invest in real estate outside of an IRA for some income they can live off of, but they also invest in real estate inside of an IRA using really a lot of the same strategies. But you can't come to us to learn how to buy and find real estate. You got to go to people that are experts. And Ron's been in this business for almost 5 decades now. He's seen all the trends. He's seen all the things that you need to know. So it's good to lean on somebody that can educate you on that, and then we'll handle the IRA stuff.
So Ron, where do they go back? Go back there, the other side. It's ronlegrand.com/IRA.
/IRA.
Yeah, that's where I just put that in the chat. That's where you need to go. And there's the phone number, 800-567-6128. And let me just say this. I've been following Ron for over 20 years. When I worked for a software company while I was doing my undergraduate degree at ASU, Ron used to, before there were influencers and other real estate gurus and out there, they were all learning from Ron.
Oh yeah.
And I first heard Ron speak, one on TV, but 2 at a marketing conference by a guy named Dan Kennedy, who no longer hosts his own conferences, but I followed the software company I worked for, sold software as a referral relationship with Dan Kennedy. And through that, I've known Ron and other people for 20 plus years now. I've been to Ron's office in Jacksonville, Florida. And so, he's been out there, like Nate said, doing it 40 plus years and taught a lot of these gurus and influencers that you see on social media, and they learned a lot of these creative finance and creative real estate deals that, Ron taught them.
Yeah.
And so go get yourself educated. That's why we do events. That's why we do these webinars. That's why we host live events, is to give you the information and the tools so you can go make the decisions, do your own due diligence, and get busy using a self-directed IRA to do these awesome deals. We're trying to do the best we can. So there's that, Ron. Thanks for being on. You're always a gentleman, and keep going. Tell us some more.
Just one more thing. That's ronlegrand.com/LT.
Land trust, for the land trust.
Land trust.
Yeah.
And the promo code is LT free.
There we go.
LT free. You just ordered this one. Just get this one, and I'm automatically going to send you the land trust course. So this is the only one you need to go to. ronlegrand.com/IRA.
Okay. Any final words, Ron? Anything you want to tell the audience?
Give us a pearl of wisdom. We're ready.
Well, right, for one thing, here's where you're going to ask me a question. Just send it there, and I'll return it back to you probably the same day or the next day. Have been a long time in this industry. I've taught thousands and thousands and thousands of people, and I wished I could say they were all successful, but that's just not true. There's one missing ingredient: education. Education is worthless without implementation.
There you go.
And that's what we're so good at. And that's what a lot of people just are not good at for a lot of various reasons. In fact, I start a class tomorrow called Business Management. That's the one thing I got to deal with, because when people come to me to learn how to buy houses and real estate and grow wealth, I'll come with that baggage. And we have to overcome that, and the fear and the guilt and all that comes with it. But you can't let things like that stop you. You got to develop an alligator skin. You got to keep moving. When you ever see a roadblock, you kick it out of the way and go past it. Because if you don't, you're just not going to get what you want out of this life, folks. It's all up to you. So take action. Do something that makes you feel comfortable. And in fact, do something that makes you feel uncomfortable until it does feel comfortable. And pretty soon the checks will start coming in. And I don't care where you're at in life. I don't care if you just need something to do, or whether you're looking for a retirement, or whether you're jobless and have very little or no income right now. All of those kinds of folks come in and they all get the education. I wish I could tell you all of them use it, but I can't. So anyway, I'm always happy to be in front of this camera, working with people and trying to get them to do something to make their life to the point to where they don't have to work if they don't want to. And I want to thank you guys for giving me that.
Thank you, Ron. Hey, remember that professional speakers boot camp you taught 10 plus years ago? I went through that as well with you.
No kidding.
Oh yeah.
That was 2003 for your information.
There you go. So
and I do want to say this. We also
22 years.
We also have a client, Ron, and I think I told you this story. He had done a lot of deals in his IRA, and I just by chance I said, "So where'd you learn how to do all these creative deals?" And he said, back in the 80s, I was on disability. I hurt myself at my job, and I was in the hospital for months. And I bought a Ron LeGrand book, and it taught me how to invest in real estate. And from that point, he started investing in real estate
and cassette tapes, cassette tapes before there even CDs out there. I had some of those as well.
They were VHS tapes before that.
Right.
Okay, so go check that out, ronlegrand.com/IRA. You can get going on that. The slides there up on the screen. We will have this presentation, the recording, put up later this week. So you can access that by going to directedira.com/webinar. You'll be able to access that. We'll keep it up there for you. If you need to book a call, get going with an IRA, just go to our website, directedira.com, go in the upper right-hand corner, hit new account call, and we'll do a 15-minute new account call absolutely for free and get all your self-directed IRA solo 401k questions answered. You want to get going with some education with Ron, you got that information there. We hope to see you at the Self-Directed IRA Summit coming up in Austin, Texas at sdrasummit.com in Austin later this month. And in the fall, we'll be doing the Alt Asset Summit. And we're just going to keep on keeping on, rocking and rolling.
Still doing the live events?
We're doing 2 a year, Ron. We're doing the Self-Directed IRA Summit. which is a 1 day, and then we're doing a 2 day alternative asset summit, altassetsummit.com, where we're bringing together all the various types of self-directed alternatives out there that people can do with the IRA or 401k.
And that's in October.
And that'll be in Scottsdale, Arizona.
Thank you, Ron. Thanks everybody for attending. We'll see you guys next time.